The world's richest man, Elon Musk, has become the world's first trillionaire. SpaceX shares gained almost 20% after a record IPO overnight. Joining us, investment analyst Roger Montgomery. Roger, morning to you. Talk us through what happened after the initial launch. Where did it go?
Well, it jumped as high as $176, so it was up considerably more than where it finished for the day. So there was plenty of enthusiasm. The float was structured so that there would be a lot of enthusiasm. Elon Musk is probably now the greatest marketer in the world, and this company has listed at well above 100 times its previous year's revenue and about 50 times forecast revenue.
We're in unprecedented times with this, but when would you expect it, Roger, to stabilise, if you like, even out?
Well, that's interesting. So at June 30, the insiders, and that includes billionaires who backed Elon Musk into Twitter back in 2022, the value of that business has declined slightly. That was merged into, in a cashless merger, into XAI, and XAI has been merged into SpaceX. So those investors will be allowed to exit after June 30. So once the company has reported its quarterly results for the June 30 quarter, so they can sell up to 20% of their what's called escrowed shares at that point. And then also if the company stock trades for five of 10 consecutive days at 30% or more above its IPO price, they'll be able to sell another 10% of stock. So that anticipated wave of selling will probably meet some of that retail demand that we've seen today that caused the stock to pop.
Where does it rank, SpaceX, in public companies around the world?
Oh, it's enormous. So to put it in perspective, the float of SpaceX at $1.77 trillion, it's now $2 trillion, but at $1.77 trillion US dollars, the market capitalization of that IPO is greater than the total of the next 29 biggest IPOs ever in the United States. It's larger than all of those combined.
It's baffling, though, isn't it? Because SpaceX made a net loss of $4.9 billion in 2025. It's not a profitable company.
No, well, that's exactly right. And that's because of the massive capital that's being chewed up by the AI business and the mad scramble to build data centers. In fact, this is an interesting fact. SpaceX generates more revenue from renting out its NVIDIA chips to Anthropic than it does from its space program. Even though the space program is exceptional, it's extraordinary. It's the only toll road to space, really. It doesn't generate that much money. And $11 billion of the $18 billion of revenue that it generated last year was from businesses other than the space business. So the space part of the business generates lots of headlines and a lot of excitement. They're promising data centers in space, which, by the way, nobody even knows if that's theoretically possible. So it's not technology that doesn't exist at the moment. It's theory that hasn't been proven at the moment. So that generates a lot of headlines, a lot of excitement, but the rest of the business is really the driver of the revenue of that business.
And a lot of headlines are generated by their leader, of course. He owns how many shares, which is why he's become a paper trillionaire, at least?
Well, it's interesting. It's probably not the number of shares that is more important for investors, but the number of voting shares that he has. He controls 85% of the vote in the company. So if you don't like what's going on, well, you can just suck it up because it's all down to Elon. He will decide how the business is run. And in fact, if you have any objections, you can't even take your problems to court because the S1 specifies that, or the IPO documents specify that any objections to the way the company is run or any complaints about management, that has to be taken to arbitration rather than through the courts.
Very interesting. But it has been good to some SpaceX employees because many have become millionaires because of this.
I suspect there'll be a few billionaires in that mix too. Yes, but as we pointed out earlier, you know, the float was structured. Only 4.3% of stock was made available in the IPO. So that tightens up the amount of stock available for institutions and retail investors to be able to buy. That's the first thing. And the other thing is that NASDAQ changed its rules to allow SpaceX to become part of the NASDAQ index within 15 days. So instead of the stock being seasoned, which is a process where a company has to be listed for a period of time, up to a year, before it can be part of the NASDAQ index, they've bent their rules to allow it to become part of the index within 15 days. Now, what that means is that exchange-traded funds and index funds that track the index are forced to buy the stock. So the excitement will be around for a while, and so the whole IPO has been structured to support the company's shares, at least initially.
Wow, incredible. The Australian interest, Roger, we know that something like 30,000 Australians submitted bid applications prior to the IPO, but more of us may actually be involved.
Well, you're going to own stock whether you like it or not within 15 days if you own a NASDAQ exchange-traded fund or a NASDAQ index fund, for the reasons I've just explained. Those ETFs and exchange index fund managers are going to be forced to buy the stock because it will be part of the index, and that happens in 14 days now, so 2 weeks away. So yes, if you own an index fund that tracks the NASDAQ, you're going to own this stock.
Interesting to talk to you this morning, investment analyst Roger Montgomery. Thanks for your time.
Always a pleasure. Have a great day.